welcome to the Stock Market Morning Prep video for Friday, May 16th. Well, we got a little bit of selling, continued selling anyway. Dow Jones down 167, NASDAQ down 31, S&P down 17, and the Russell down 7. So it looks like, from what I see, is that the Russell and the NASDAQ are starting to take down the S&P and the Dow Jones after making new all-time highs yet again Monday and Tuesday. So that it's a little early to say, but it does look that way. I was actually quite surprised that the markets actually sold off the way it did yesterday. And again, we had that quick morning sell-off, 1 hour, and we just kind of based and grinded higher pretty much most of the day yesterday. So if you weren't quick, you missed out on the opportunity to get short for the day. So where do we go from here? Well, today is options expiration, monthly options expiration. So again, we talk about the shenanigans that the market makers play. So really, it's anybody's guess. Could the markets go up? Sure. Markets can continue to go lower. Absolutely. So I'm not going to really, forecast anything for today. But what I will say is that I think, aside from today, I think we should see some real continued weakness between now and the end of the month, maybe early June. And again, nothing goes straight down, but I would see. Wouldn't surprise me, basically, that we have the market start to roll over again. There's every bit of warning signs out there, and I continue to see that. One thing is that really steps out is, aside from the yen strength, we do have some yen strength, is really the bonds. I'm not a credit guy, I'm not a bond guy, never traded bonds, but I continue to watch bonds for my analysis. And I looked at the commitment of trading reports for bonds, and they are heavily shorted. So the crowd is heavily shorted bonds, and that is why it makes a lot of sense that you see the bond markets continue to rally here, aside from equity markets rallying. And that's going to eventually hurt equities. If we get a major short squeeze, which is possible, and it does look like it from the charts, we can literally see more money coming out of equities immediately and going back into bonds. And we could see that happening, and I think it's actually happening now. So if we continue to see strength in the bond market, that's only going to put pressure on equities, and you're going to get that risk-off type of environment. Now, we could see a decent correction this summer, coming into the summer months here. All right. Now, again, this is a forecast. Doesn't mean that it's going to happen, and go get short the market. Have yourself a trading plan. Make sure you stick to it. That's the bottom line. So what do we see here? Well, we have the VIX. In front of you is the VIX with the Bollinger Bands, and we are at the low end of the range. What's happening here, as you can see, the Bollinger Bands are starting to tighten. That means that pressure is building. Doesn't tell you which direction it's going to break to the upside or downside, but my guess here, it looks like it wants to go higher. So if the VIX goes higher, obviously it's inversely correlated to U.S. equities. Equities would and should move lower, okay? Let's take a look at the bonds, and this is where we had identified that head and shoulders pattern, if you remember. We have the head, right shoulder, left shoulder, neckline, head and shoulders target is 142.27, and it really looks like it wants to get there. You can see that here. We have this side step. We took out the slanted neckline, consolidated, broke out, penned, if you will, broke down just a touch, and then we exploded higher. So that is not a good sign. Now, yeah, we are a little bit extended, and I could see the bonds pulling back to one of the moving averages, which would bode well for equities for at least a short term. But I think once that pullback does happen and realigns itself, resets that overbought reading, then I think you're going to see bonds go higher again. And if that does happen, then look out below, because I do think the equity markets are way overpriced. I think they're fairly valued. There's nothing good about buying equities up here at these levels anyway. Okay, let's take a look at ES, which is the E-mini S&P futures contract for June, and as you can see, the 1272 extension continues to hold. Now we roll back, we broke out of it, but now we pull back into it, and we just barely caught that 50-day yesterday and bounced off it. Now if we break that 50, you're going to see this long-term uptrend line from the November 2012 lows. That'll be your next target, and then of course the 200 in the ES. Okay, look at the volume. Lots of volume here on the downside. On distribution days, you can just see it in red. All volume where we have an uptrend. This little move higher. What do we have here? Lower volume. Okay, I do think volume does continue to be a #1 catalyst in a technical analysis. People don't believe so anymore, but I do. Here is the transportation I'm sorry, the Dow Jones Industrial Average. Apologize. As you can see, I put these pivots here, these little ovals, and you can see every time it makes new highs, we sell off. Makes new high, sell off. We made new high, and now we're selling off again. And we caught the 50-day moving average in the Dow Jones. If we close below that, then I would say look for a test of this swing low. And then, of course, the 200. By that time, if it does get there, I'm sure the 200 will probably coincide nicely with this new pivotal low here that we have. Okay, so take a look at the Dow. Now the transports is holding up quite well, and I think it could only hold up the market's one indice, which is the main index here, as you can see, and is the leader of the 5 that we follow. But you got to realize that one index, one leader, is not going to hold up the whole market. At least not for the maybe in the short term, but not for the bigger picture. If we start to break down here, this is what I want you to look for intraday as well. Look for clues that the transport's now starting to break lower, and when that does happen, and we take out this uptrend line from way back in 2013, then I think that the markets will give us a full-fledged sell signal and that a top is in place, but not until then. We want to get everything lined up in Q here. Now, the Russell, good gauge of risk, one of our leaders, broke down, barely just got above this little trend line area of support, as you can see here, and now it is back above it, but barely. And you can see here the volume continues to grow as we get some distribution days. We see increase in volume on down days, decrease in volume on up days. So this is not good, not healthy, and this chart is no way near bullish. We have bearish configuration on all of the moving averages. We're below the 200 and the SMA, below the 200 and the EMA. We have big trend line resistance. We have downtrend trend line here. So there's nothing bullish about this IWN chart at all. Nothing bullish about it. And then lastly is the Qs, as you can see here. Now, Qs had some help with Cisco. It reported, but again, and then of course Apple really didn't sell off because it's heavily weighted. But no doubt about it, this is not a bullish chart as well. It is going sideways for the time being, but I would look for lower prices as well. At least this trend line area. Remember, we do have the bigger picture is this head and shoulders pattern that we have with the neckline coming in right here, coincide nicely with the 200 day. So remember, we have to break below it, though, in order for it to be valid, and this is a bearish pattern, and right now it's far from that, so there's several points away, but just keep in mind with the bigger picture here, okay, guys? Let's see what happens today. It's going to be really interesting. I think it's going to be, I think that we would probably look to continue some selling. Maybe we get a weak bounce today, we hold these levels, and then we start to continue selling off going into next week and at least going into June. And then we would reevaluate it. But right now it doesn't look pretty. Bonds are telling a totally different story. And also the flight to safety, these sectors that are producing yields. You know, you have the real estate, investment trusts, you have the utilities, you have consumer staples. They're all moving into new highs, and money's flowing into there, parking there for now. Trying to weather the storm here of what's happening. So I think that's where the smart money's going, and I would definitely be looking to look for some short candidates. And speaking of short candidates, I do have a few that I like short that I'm looking at. Is Costco, COST. I like the coffee stock short, Green Mountain Coffee, GMCR, SBUX, which is Starbucks. I like Western Digital short. I like some of the tech stocks short, FFIV. So there's a lot of candidates that are now starting to falter and starting to lose some momentum to the upside. And when that does happen, you'll see a lot of these stocks going to really start getting hit, and people are going to start taking profits. So just get a quick heads up on that. All right, guys, have a great weekend. Be careful today. Today's Friday. Don't want to be pushing it too much. And we'll have a big report on Monday. Have a great day. Enjoy the weekend.